From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for December 9th, 2015. Just a moment, we're going to be looking at the USDJPY, the US dollar versus the Japanese yen for today's analysis. But first, I'll recap a couple of the trade suggestions over the past few days. First off, starting here on the GBPUSD, the Great British Pound versus the US dollar. Yesterday, looking for a selling opportunity as the market was pushing through and breaking out underneath the 1.5 thousand level. You can see historical support along the green shaded area back here on the left-hand side. The last time it broke through that 5,000 level, we took a tumble all the way down into the 4,900 level. So with the push below here on the fall that we saw yesterday and the push below the 5,000 level, on the rally back underneath 5,000 was looking for some more resistance into 5,000, at least another challenge back down here into the mid 49s. Well, the market had a little bit different idea. It did hesitate for quite a long time. By zooming in here, you can see we had this 4-hour candle, 1, 2, 3, 4 4-hour candles just kind of hovering just above the 5,000 level. So there was still some hope that we could see it take a turn back down. Market had a little bit of a different idea and pushed through the 5,025 level and continued to pressure now up towards the 5,100 level into the 5,090. So hopefully you were using appropriate risk strategies in the case the market didn't do what you expected it to do, or what I expected it to do, and you closed out the trade appropriately. I'm out of that trade now. Hit the stop loss. It was a 50 pip stop loss. Good news that I got out of the trade, because it's would have been further into the negative as it pressures back towards the 5,100 level. I would expect today we will see again some resistance here, 5,100 to 5,125 on this rally higher. We take Fibonacci from the high down to the low. That puts the 786 right here in the middle of the blue shaded area of the most recent high down to the current low, 786, right in the middle at 5114. So I will expect some resistance here. We've seen it before. If you happen to be in a buy for whatever reason, look at the blue zone, 5,100 to 5,124 as your target. If indeed it does continue to pressure higher and breaks through 5,125, of course, in a similar fashion, you would look for the continuation of the upside. So if you're in a buy for whatever reason, look at this as your first target. If you're looking to go short on the pound dollar, look at this blue zone as your next opportunity. I'm going to hold off on any new shorts until we get a real good clue that the market's going to start working its way back down again. Another trade opportunity that we talked about yesterday was the potential of selling under the yellow shaded area, 72.45. The market never made it all the way up to 72.45. We saw an attempt here. It got as high as 72.35 before turning around and going back down. I still have the pending trade there. If we don't get any movement towards it today, I may go ahead and take that pending order off, as it does not, if it doesn't go back up there. And clearly a breakdown of the orange zone looks for it to go all the way back down to the blue shaded area at the very bottom of the chart. Moving on to the USDJPY, the US dollar versus the Japanese yen for today, we're looking for buying opportunities, and it's got fairly low risk and a good, decent risk-reward ratio here for this currency pair. You can see the uptrend. We've been in an uptrend going all the way back here. This is the daily time frame. Going all the way back here to mid-October, October 15, we found the low down here. We started moving up, went into a period of congestion, broke above that box, and went up a little bit more. And now, since then, and we're looking since November 6th, so a little bit more than a month now, about a little bit more than 4 weeks, we have been just bouncing around inside this range, this black box that you see here. In the direction of the previous trend, the hope and expectation is that we'll see the breakout of the trend in the direction of that trend to the upside and continue the direction of the uptrend. Now, that doesn't have to happen, as we've seen before. If the market decides to go a different way and push underneath that range, we could look for some further retracement of the previous uptrend. So this is the way we're looking at it. We're in a range. We need a breakout, really. But while it's inside the range, it does provide us opportunities. And we've had other opportunities to buy towards the bottom of the range, and profitable opportunities over the past couple of weeks. So buying into the orange zone is the next order of business for the day today. I'm actually going to zoom it in one more time here on the daily time frame. Look at all the support we've seen here, here, here. Could that break down this time? Sure. There's a good possibility, or there is a possibility, maybe not good, but there is a possibility that it breaks down and continues to go back down, retracing back down towards the 100 period moving average, 100 daily period moving average sitting down here into the 121s, and that's the green line right inside the pink shaded area. There is that possibility, but as history has shown us for the past 4 weeks, there is definitely support here, and I think it bears a good shot, an opportunity here to go long into the 122.50 to 122.25 level. 50 to 25 is your zone of support here. That is the orange shaded area. Buying, and of course, first off, targeting back to the green shaded area, or even as high as the purple shaded area, become your potential targets. That's back to 123 or 123.50 on the way back up. So anywhere within that orange zone, I currently have my stop loss just underneath the lowest low of the range, which is this blue candle way back here on the left hand side. So my stop loss down around the 122.15 level. So if you get in at 122.55, stop loss at 122.15, you can see that's not too terrible of a risk on the trade, and the potential profit is pretty decent as it goes back up towards the mid 123s. And of course, a breakout of the range, as I said, to the top side, we could even see some more profit as it continues to pressure back in the direction of the trend. I have applied the trade manager to the trade, so we'll look for the market to continue to pressure back up and lock in profit as we see it. Typically, I will lock in profit when I see 20 pips, lock in break even if I see 20 pips or more. So if we're in at 122.55, we need it to go to 75 for us to get the opportunity to go break even on the trade, and then of course anything beyond that becomes profit for the trade. So anywhere inside the orange zone between 122.55 and 122, actually I might call it 55 and 30, 122.55, 122.30, anywhere between there, I would look for an opportunity to go long at the bottom of the range for the US yen today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.